Imagine if one single candle could predict the future. Not because it looks like a pattern you've seen before, and not because it formed near support, but because its wick and body structure mathematically match candles from the past. Candles that led to the same outcome. That's exactly what this indicator does. It's called the Wick-to-Body Ratio Forecast, and it doesn't just show you a random guess, it draws a predictive line based on past movements from similar candles, and that forecast can help you front-run the next 5, 10, or even 15 candles. In this video, you're going to learn exactly how this indicator works, how to trade with it, and how to spot the setups where the forecast is shockingly accurate. Let's get into it. We'll start with the basics. A candlestick is made up of a body, upper wick, and bottom wick. The body shows where price opened and closed, and the wicks show the highs and lows price reached during that candle's formation. Most people just glance at the candle's shape and move on, but this tool actually runs the math. Let's say you have a bullish candle. The body is 10 ticks tall. The top wick is 5 ticks, and the bottom wick is 2 ticks. That means the total wick height is 7 and the body is 10. So the wick to body ratio is 7 divided by 10, or 0.7. Now, here's where the magic begins. As soon as that candle closes, the indicator takes that ratio, 0.7 in this case, and scans through old candles to find other candles that had a similar ratio. When it finds enough matches, it overlays their future movements and creates a forecast. You'll see it as a curving red line on your chart. If the line slopes upward, that means historically, candles with this same ratio have led to bullish moves. If the line curves down, you guessed it, similar candles led to a drop. And if the line is flat or choppy, then those past candles were followed by sideways and indecisive price action. If the matches were consistent, the line will be smooth and red. If they were volatile, the line turns blue because the average has more deviation. It's kind of like saying, the last 10 times we saw this exact type of candle, here's what price did next on average. And that's where it gets powerful. But hold up, that's just the foundation. We're still not ready to take trades just yet, because all of this depends on one crucial setting, and adjusting that setting can change the forecast completely. So let's jump into the settings. The loopback period is how far back the indicator looks to find matches. If you set it to something high, like 700, it will search through a massive amount of candles and have more samples to work with. If you set it lower, like 200, it will narrow the scope and become more sensitive. But here's the smart part. The indicator adjusts itself based on how rare or common the current wick to body ratio is. If the current candle has a very unusual shape, maybe a giant wick and a tiny body, the tool won't force a match. It adapts the acceptable range to try and find enough valid comparisons, but only if they make sense statistically. There's also a maximum number of matches it will use. No matter how far back it looks, it will never consider more than 15 historical candle matches. This keeps it focused on the most recent data. So in simple terms, if the candle's structure is common, the forecast line gets more examples to work with. If the structure is rare, the indicator tightens its accuracy to avoid bad data. It's like having a flexible filter that knows when to zoom in and when to zoom out automatically. Now, enough theories, we're going to show you exactly how to trade with this indicator. The simplest way is to treat the forecast line like a directional bias. Once a candle closes and the forecast appears, you check the line. If the line curves up, you look for long setups. If it curves down, you look for short setups. But you never enter blindly. You only use the forecast as confirmation. Combine it with simple price action, like a break of a recent high or low, or add an order block, fair value gap, or supply and demand zone for your entry zone. That way, you're not just relying on the forecast, you're using it as confirmation. For example, if price breaks through a resistance level and the forecast is bullish, that's a strong signal. But if the forecast was bearish, you might want to stay out. Same goes for bearish forecasts. If price breaks through a support level and the forecast is bearish, it's a strong signal. But if the forecast was bullish, you'd want to avoid chasing the breakout. You can also use the deviation color to decide whether to hold your position longer or get out quickly. A strong red forecast line means the past moves were consistent, so you might hold your position longer. A blue forecast line means there's more variation, so you should closely monitor your trade. But don't just take our word for it. Let's walk through two trades, one where the forecast nailed the move and one where it helped us avoid a trap. For the first example, price comes down and retests a bullish order block with strong bullish volume. If we toggle on the wick to body ratio forecast indicator, we can see the forecast line curves upwards. So we'll take a long entry with a stop loss placed just below the order block and target a 2 risk to reward trade. Now let's look at the second setup, which helped us avoid a trap. Price was in a strong uptrend and approaching a resistance level. Price broke through the level and closed above it. But before chasing this breakout trade, we'll toggle on the forecast. You can see that it's choppy with a blue line and no strong red forecast. So we'll ignore the trade and wait for a stronger setup. And just like that, price bounced around aimlessly for the next few bars before reversing. That's exactly why this tool is so powerful. It doesn't promise perfection, perfection or predict the future, but it gives you a statistical way of forecasting, and that's all you need to make better trading decisions. So the next time you see a strong candle form, don't just guess. Let the candle's wick-to-body ratio tell you what's happened before. Let the forecast help with your decision. Because when you start using data and historical patterns, you're no longer guessing. You can grab the Wick-to-Body Ratio Forecast using the link in the description and start using it for free. That's all for this video. If you enjoyed it, make sure to leave a like, comment, and subscribe. Until next time.